This is the Blockchain Real Estate Podcast, sponsored by the Blockchain Real Estate Summit. If you're interested in the intersection of real estate, blockchain technology, AI, and more, you've come to the right place. Don't miss your opportunity to attend the Blockchain Real Estate Summit 2024, happening this September 24th through 26th, online for our worldwide audience. Get your tickets at blockchainrealestatesummit.com/registration. Enjoy the show.
There we go. All right, ladies and gentlemen, welcome to another Chicago Blockchain Real Estate Collective meetup. I'm your host, Adam Carswell, joined as always by our fantastic co-host, Michael Flight, the CEO of LibertyFund.io. Michael, how are you doing today? And any updates on your end? How is progress with Liberty Fund?
Liberty Fund is going fantastic. We've had a lot of interest in it. We've also had to do an education to explain to people that it's not cryptocurrency. It is a stable, tradable real estate fund. And we're going through an education process of saying it's just private real estate that's tradable. And so once a lot of people hear about that, they understand the process, then they're like, wow, this is really cool. You mean I can get these normal monthly cash flows, and because a lot of private real estate pays out quarterly, and they said, and if I need to potentially get out of this, or if I want to trade out of this, I've got options. They can sell their shares, they can actually use it for estate planning and divide their shares, or they can borrow against it. And that is a lot of people that have been in syndications before, especially private real estate, that's very difficult to do. So, and that's why we're really excited to hear about Michael Carpentier. I said it wrong, but I'll continue to say it wrong. But we're excited to hear about him and to some of the other things that are happening on the blockchain and what blockchain does for tokenization of real estate and everything else. So with that, Adam, I'll turn it over to you.
Thank you. And we want to just give another big thank you to our team, those who put this meetup together, working hard behind the scenes, making sure we show up here and deliver this top-notch content. Thank you. You know who you are. Thank you for helping us out here today. And for those who are, again, with us here live, thank you for investing your most valuable resource with us, your time. If you're on the replay, be sure to smash that like button, that subscribe button. It really helps us in the long run with visibility and bring on more high-profile guests like Michael. So really looking forward to today. By the way, if you're with us on Facebook, we're dropping a link in the comments so you can come join us here in the Zoom room. You can also just drop a hashtag CBREC on Facebook if you like what you hear today. And just get that chat box warmed up again. I see we got plenty of attendees in here. So guys, don't be shy. Drop your name in there. Come on. Where are you tuning in from? We want to hear, we want to learn as well today. And here we go. The title of tonight's meetup is Tokenize the Equity in Your House. Very compelling. There is a subtitle, and you know what? I forgot to punch it in here, but we'll get to it. Tokenizing the equity in your house. Michael, you shared a little bit before we press record, but could you kind of just tell us a little bit of the story of how we first got connected with Mr. Carpentier, as well as a little bit about who he is, and then I'll bring it home with the formal bio.
Sure. Well, I was investigating blockchains, and we were looking at which blockchain we wanted to issue on. And we were looking at blockchains, how many had different real estate projects on there, how many could work with real estate projects. And so throughout doing that, one of the things that came up on the Algorand blockchain was Michael's company, Vesta Equity. And this was probably just about a month and a half ago or 2 months ago. I'm like, I've never heard of these guys, but I really, really want to find out. This is a fascinating, project. It's a fascinating company, and I love the concept. So I would have to say that I'm going to plug Algorand again, because the Algorand people have put me in touch with a number of fantastic people and projects, and it's just been a gold mine with those people over there, and we really like their blockchain. So with that, I will shut up.
All right. Well, yeah, here we go. Time to have some more fun, ladies and gentlemen. Michael Carpentier is the founder and CEO of Vesta Equity. Vesta Equity unlocks value and disrupts the institutionalized home equity finance model by directly connecting homeowners and property investors to eliminate debt for equity appreciation. They do this by leveraging blockchain, NFTs, and a peer-to-peer marketplace. Their goal is to create a 100% frictionless process where the century-old complexities of home equity finance are completely unbundled and eliminated. Their vision is to empower home equity for all. And on top of that, I mean, talk about a laundry list of accomplishments. Michael Carpentier also, he has over 25 years of experience building digitally driven companies. So ladies and gentlemen, give it up for Michael Carpentier. Go ahead, use those Zoom emojis if you got them in there, make some noise in the chat box. And Michael, the stage is yours.
Oh, first of all, I want to thank you guys for inviting me to participate in this. I genuinely appreciate it. We love reaching out to the market, talking to people who are interested in this, because there's still a story to be told about blockchain. There's a lot of misconceptions about blockchain, and unfortunately, it does get wrapped up in the whole cryptocurrency noise out there, which is not necessarily reflective of the technology, its application and use cases, and the potential it has. I also want to thank my two partners who are also on this webinar, both Talon Pence and Imran Rahman. It would not be possible to have this business without them. They've contributed to this, and a lot of the success we've had to date has been because of the great teamwork and contributions they've made to this company. You mentioned Algorand. It's also a great company, fantastic partner of ours, as well as others like Circle that have also enabled the development and execution of this platform. So I have a bit of a deck here that I'm going to share with everyone right now. So I'm just going to share my screen, bring it up so that I can talk to you a bit about what we are and what we're doing. So as everyone can see it?
Looking great. Ready for it.
Great. Okay, excellent. So as we mentioned, Vesta Equity, our phrase is live in prosperity, and you'll see why we believe in that. As I mentioned to you, three core founders, myself, Imran, Talon, we covered the spectrum of operational issues. I'm the CEO, Imran's the COO, and Talon's the CTPO. So we each handle each facet of those elements. The vertical we're in is home equity finance and blockchain, decentralized finance. Our partners are Algorand and Circle, and we'll be in market officially October 2021. I throw this quote in there because there's a lot of truth to it. I'm not the biggest Janet Yellen fan in the world, but this quote's very true. Most wealth is in people's homes. If you take out the top percentage, the vast majority of not only Americans, Canadians, Europeans have the vast majority of the wealth in their home. The problem, it's locked up and not easily accessible. And this is one of the problems we address with Vesta Equity. So imagine if you owned a home and you were able to use those assets or use the cash in that home to help your children attend university without going into debt. And as we've seen, university debt's skyrocketing right now. A lot of people are never digging themselves out of the hole. It can provide you the opportunity to start a business. It could be a source to build for a better future. It can also allow you to pursue some of your life pursuits or dreams or goals with loved ones and friends. It's something you can't do when the money's tied up. And it allows you to deal with those unexpected issues that come up in life. As we all know, life can throw you a curveball. There's nothing worse than having that happen. And on top of it, you've got to sell your home, or you've got to take out another mortgage or a home loan and start paying interest on debt that you had already paid off after years and years of hard work. So the reality is, as I mentioned, people work years to pay off their mortgage, but then can't access it. They've got untapped equity in their home. They want to be able to access it without any hindrances. That's not possible right now. And the truth of the matter is, you can't access the equity in your home unless you borrow or sell it. And selling comes with a lot of hassle and a lot of problems. Literally, home equity financing hasn't changed in over a century. 100 years ago, it was the same problem that it is today. Fortunately, blockchain has enabled a whole array of opportunities with regard to the finance industry in general, but very specifically when it comes to home equity financing. So what we decided to do is we took a look at this market and said, it's not just about tokenization. You can tokenize an asset, but what do you do with it? How do you really create a opportunity for both the homeowner as well as investors? Because tokenizing your home is no good if no one wants to buy it. So what we've done is we've created a model where homeowners onboard themselves, and I'm going to show you some screens on how it works later, but essentially onboard themselves. There's a KYC ML process, verification process, an appraisal process. They open up an account and they put their home on the market, on the system. What we enable on the other end of the spectrum is we bring in, at this point in time, just accredited investors. They go through the same KYC, AML, and accreditation process. But what we've done that's unique in the center is we've created a marketplace. And this marketplace enables both the homeowner and investors to essentially deal directly one-on-one with each other. And by doing that, we're really creating a true marketplace where there's supply and demand, and people are dealing with each other directly, completely disintermediating the entire current process that exists in our current state of the economy, where you've got all sorts of people involved, all sorts of people taking their cut. At the end of the day, the bank's making a significant amount of money on someone's home when they have to borrow. The typical average size of a mortgage or home equity financing in the US is about $300,000. You can end up paying anywhere between $77,000 to $120,000 in interest payments on that over the course of the term of the loan. So a significant amount of money. So again, you'll hear this, you'll hear us say a lot, but imagine the freedom, imagine. It's about envisioning a new opportunity, a new future for homeowners and investors. So we want to create the opportunity for people to access the equity in their home with no monthly payments, and that's exactly what we do. So if you're a homeowner, we believe it's your home, your money. It's very simple. There's 3 easy steps to access your equity. You set up through a guided process using government ID. You create a secure account protecting against any fraudulent activity. We're very, very careful about security and fraud on the platform for a variety of reasons, but we're dealing with large assets, your home. We're going to be dealing with the equity in the home, so we'll want to make sure everything is secure. We believe you have the right to control your wealth. So we want you to skip loans, no interest, and then be able to access the assets in your home and be able to do with what you want with it. So essentially the setup process is very similar to what it would be if you were setting up your home to sell it. We want to create something that's familiar to people. We didn't want to make it difficult. The whole issue of blockchain, if you're going to notice from the homeowner's perspective, is not that apparent. We're not screaming, this is on the blockchain, this is, you're going to be using stable coins and all this stuff. We've made it very simple. We've made it accessible. Just like your cell phone works great, your iPhone works great, your screen works great. You don't really care about the technology behind it. All you care is that it works really well. And that's what we're trying to do here. So they can set up their home, they can add pictures, they can add all sorts of things. They have the appraisal that we also automate. We send an appraiser over to the home, appraiser does the home, that all gets entered onto the system. We also bring in a feed of market data where people get access to trends that are happening in their neighborhood, house types, et cetera, et cetera. So that ends up being, sort of a juxtaposition to the actual appraisal value, and it provides them with data from both the homeowner side, but as well as the investor side. You'll see how they can end up doing that. So what they end up doing is they end up taking a portion of that equity. So let's say they have a $500,000 home and they want to access $200,000 in equity. They tokenize the $200,000 and put that $200,000 on the marketplace. And what we've got set up there is sort of a negotiation, for lack of a better word, negotiation tools where they will put their offer to the market and say, I want to sell it for, this percentage of token for $200,000. And what they're going to get is they're going to get counter offers from the marketplace. Some counter offers may be lower because that particular market is not as buoyant as other markets. In some markets, the offers may be higher because investors are seeing big trends in that market and are thinking, if I don't snap this up right now, I'm going to lose out on this and I'm going to lose out in the future appreciation. One of the things that we've built into this platform is a secondary market. So once you as an investor own the equity in these homes through the token, you can then sell it to other investors who want to potentially buy into that market. So if you've been in that market for a while, you've decided I want to cash out and I want to take some of that money I had in California or Oregon or Texas, and I want to stick it somewhere else like Florida or some other up and coming market that I've decided has a lot of potential, you can do that. The flip side is the homeowner benefits. The homeowner benefits are essentially, in a nutshell, you're accessing the home equity without borrowing and incurring debt. You get to negotiate directly with investors instead of a chain of lenders. And then the funds on equity sale are 100% yours. There's no concerns after that. You can walk away with the cash and do what you want with it. It's yours. You don't have any burdens in terms of potential foreclosures or any other issues you have to worry about, and certainly no monthly payments or interest payments to a bank. So the opportunity on the investor side, and this is where it gets interesting, because if you take a look right now at real estate as an investor, there's lots of ways to invest in real estate. Most of them aren't that transparent. And as we've seen in the past, lack of transparency and investment in real estate has caused some pretty serious problems from a financial perspective and was a major contributor to the last financial crisis. So one of the things that's significantly important to us is that we're onboarding investors. And these investors, as you'll see later in one of the slides we have, can range from individuals right through to the enterprise level. And there is a bigger play down the road for us from a complete full-out rollout of an enterprise level solution dealing with big developers as well as big institutional investors. But right now, let's talk from the perspective of investors to professional investors, financial advisors, home offices, small private equity funds. They're all set up to easily transact on this platform. And it's 100% transparency. They have, again, a very simple, easy way to onboard themselves. It's not complicated, and they can be up and running within a very short period of time. I also want to might add, we don't charge investors any fees for coming on board to the platform. It's completely free to them. We will be introducing services and some analytical tools later on that they can pay a monthly fee for right now. But right now, you onboard yourself and you're up and running within no time at all. As I mentioned to you, complete transparency is something that's extremely important to us. We want investors to be able to know exactly what homes they're buying a percentage in, where they are, what trends are taking place in those markets, and we're providing all that and facilitating all that. It's easy in, easy out. You transfer the money into USDC if you want to exit and cash out, and you can have that money in your bank account same day, no issues. If you want to sell to other investors, all the mechanisms there and exist for that. We've got a very simple UI for people to be able to see how their accounts are doing and what they're doing. We also have very simple dashboards as well, where they can manage their growth, analyze their portfolio, as well as be able to import data from third-party sources that can give them trends of what's going on. And they can actually zone in on live property level activity with a whole myriad of transaction options available to them. As I mentioned to you, they can log in with a single click. They can see what they've bought, what they have, what offers they have pending, what other homes that might suit them on the right-hand side that might suit their investment needs and investment trends they've been partaking in, and be able to, within 5 minutes, be able to get a complete overview of their portfolio and how their portfolio is performing. I mentioned to you the marketplace. This is an important part of our solution because it enables the liquidity that would not typically exist for current investors to be able to trade with other investors, but it also allows a homeowner to access the marketplace, not just from a first-time sale, but if they want to buy back their equity, they've got that opportunity to. They won't be accessing it with their name displayed that, hey, homeowner ABC wants to buy back the equity in their home, and investor Y would go, ha, I got them over a barrel. No, it'll be anonymous to that extent. So they'll be able to access, do the same buy, bid, sell with the investor and see if they can buy back their equity. It's always an option. It's the type of fluidity we want on the marketplace and the type of open dynamics we want and transparency we want to be able to allow people to access their wealth and be able to do what they want with their money without the hindrances of banks or other institutional parties that are typically involved in this process. So from the investor benefits, there's no transaction fees. A lot of people are saying, are you crazy? Why aren't you charging transaction fees? It's very simple. We want to create a platform where people can easily onboard and not make our money off their transactions. There are plenty of other ways for us to make money. There is a fee for the homeowner when they do transact their equity, sort of pay as you go, and I'll talk about that in the next slide. So I'll skip that. So how we make money, because I'm sure everyone's going, well, how do you make money if you're not charging investors? We make money in a very simple process. We do a sort of a pay-as-you-go service fee from the perspective of the homeowner. So if the homeowner wants to tokenize $300,000 of home equity and access that cash, we would charge a one-time 3.8% fee, and it's pay-as-you-go. So as they sell it, sorry, pay-as-you-sell. As they sell it, we charge them the 3.8. So a typical transaction of $300,000 would net us $11,400 in fees. A lot of people are going, wow, that's small compared to what the banks would earn. Yes, but we feel it's equitable and fair. And we're going to open up a bigger opportunity in the long term with a whole bunch of people who typically wouldn't necessarily access the equity in their home. And you're going to see what I mean by that in a few slides. On a per customer basis, one of the things, and this comes from the experience that both Imran and I have, we come from a digital marketing background. You're always trying to evaluate your transaction per cost of acquisition. We have a very healthy sort of revenue per acquisition, and even on a more significant basis, homeowners over a 10-year period, we feel are going to transact with us at least twice and give us referrals. So it starts becoming quite a dynamic market when you start looking at it from that perspective. And I'm sure a lot of you know that the average home flips every 8 years. So we're being super conservative with the lifetime value of a client being just two uses of our platform. As you all know, this is a big market, and I'm going to, be able to talk to you a little bit about how we look at the competitive landscape, but it's a significantly sized market. It's combined on an annual basis over 2.53 trillion a year, and that's just in the US. When you start adding in other markets like Europe and Canada, South America, Central America, and parts of Asia, you start getting into the tens of trillions and close to 100 trillion. In the United States alone, there's about 90 trillion in underlying residential assets. That's a significant number to remember, because we feel that there's a larger opportunity with those assets that either aren't accessing home equity, but could see this as an opportunity to diversify the asset that they currently own and open up further opportunities for them. The competition is significant. We've subdivided the market into 4 groups: traditional banks, who we all know are the grim reapers in the marketplace; the reverse mortgage players, they play strictly in the reverse mortgage, and we've siphoned them out for a specific reason, because that's all they do. And there's about 300 of them, and it's a $10 billion market. Then you got the online lending guys, which have basically taken what the banks do and have digitized the process and made it a little more seamless and a little faster and quicker, and their approval ratings are a little higher in terms of mortgages. But then there's those guys, and then there's the home equity sharing guys, or they're really disguised as term loans that exist out there. Some of these guys are sort of dabbling in tokenization and blockchain, but what they're doing is they're aggregating debt, tokenizing the debt, and that's quite contrary to what we're doing. It's not as a dynamic an environment, and at the end of the day, the homeowner is required to take a sort of knockdown in their home value right off the bat. So off the appraisal value, it's usually 10 to 20 points depending on who they are. So it's a very different model from what we're doing, but we're very aware of those markets. And the reason we bring this up is we want to really diversify and show the difference between what we're doing, which is a true decentralized blockchain play, where we're enabling a marketplace between homeowners and investors. None of these guys do this. Won't dwell too much on this, but when we looked at the market, and I'm sure since a lot of you are in real estate, there's a big opportunity in reverse mortgages and home equity lending at the onset for this, and that's why we're really going to focus on that. We have a forward mortgage market, which is the 3rd tier we're going to be launching into in about 18 months. But our first targets are the reverse mortgage and home equity market, because we're tapping into homes that are currently owned and have equity sitting there. So there's about 40% of homes in the US right now don't have any debt on the homes, and those are the first homes we'll be targeting. Now, I mentioned to you, a lot of people, and I've even heard this discussed early in our conversations when we were in the waiting room. Who's going to do this? Is blockchain a solution looking for a problem? It's not. We've got people out there that simply don't access the equity in their home for a variety of reasons. They don't want to sell, they don't want to go into debt, and why would you? Then we got people who currently have debt, and we certainly have a solution for those people that will be launched prior to our first tier launch into the market. But right now, if just imagine on the homeowner side, and then we've got the investors on the right-hand side. We've got two groups in here that will both end up being supply and demand. So the Brooks and Quinn, we've identified this archetype, are those homeowners that own significant homes. There's no debt on the home, but they want to access it. They don't want to sell. It's the family home. They're quite happy there. But why not diversify their portfolio? So the Brooks and Quinn of the world are the type of people we're going to see. They're going to feed both ends of the marketplace. They're going to be supply in terms of the asset, the home, but they're also going to be demand, because they're going to take that $2 million home, maybe tokenize half of it, they're going to take that other half and they're going to invest in other homes and other marketplaces. Why would you do this? Simple. Why have your eggs all in one basket? Why have all your real estate asset all in one home in California when you can own half of it in California, half of it in Miami, another 25% in Portland, and another 25% perhaps in Massachusetts? And that is going to be a dynamic element to our marketplace. There are other people who are going to, just end up being on the supply side of this. Those who just want to access the equity in their home, as I previously mentioned, to do things with the equity in their home and live a fuller life because they're at that point in their lives where they want to do stuff like that. And then there are going to be those who have to access the equity would really be forced into a, not a great situation from a home loan perspective or a reverse mortgage, depending on their age, who have to, something's thrown them a curveball and they have to actually do that. On the investor side, there are three groups. The one that we feel will both be supply and demand is sort of what we define as the Quentin of the world, the professional investor who's a professional financial advisor who will both advise homeowners, hey, let's loosen up some of the equity you've tied up in that home and let's take some of that equity and invest it in other homes. So those types of people on the investment side will end up being both the supply and demand. And then we're going to tap into the private investors who, at the early stages are going to be accredited investors who want to diversify their portfolio and have real estate as part of their portfolios. We know all successful real estate portfolios, all successful financial portfolios have real estate in the mix. It provides that balancing sort of consistent growth in your portfolio. It's not necessarily high risk. It's potentially high growth in some markets, but not as volatile as equities or volatile as some commodities, or as volatile as some cryptocurrencies as we've seen over the last several months. And then we're also going to tap into sort of those small private equity funds that are not large funds, but small to medium-sized funds at the early stages that we're targeting, or small home offices. This is not going to be how we're approaching the marketplace. This is not going to be your father's marketing campaign. We're deploying a data-driven, profile-driven digital acquisition campaign, coupled with partnerships with associations like AARP, CRA. On the investment side, we're going to be targeting organizations like IFC, IIA, and APFA to partner with them and bring our solution into their ecosystems and also tap into them from distribution perspectives. Our rollout is starting in the West, moving east. We've picked this for very specific reasons. There's a digital element to a lot of these West Coast states where land registry offices are fully digitized. There's a greater sort of affinity for digital platforms, and there's a greater sort of psychographic element, as you saw in our archetypes, for people who are willing to and want to participate in this. It's also the number of homes as well in those specific areas lend themselves very much to this type of platform and this type of solution. So over the course of 3 years, we've plotted out very conservative and a logical path to aggregated revenues of over $30 million. That would net out a very small percentage of the whole total home equity finance market, but certainly a step in the right direction. It's very plausible the business will grow at a much more rapid pace than that, but we didn't want to take an overly aggressive projection or forecast based on our current fundraise that we're doing. Wanted to be conservative and project something that was realistic. There's 3 core areas that we'll be targeting in the first 36 months: the California, Washington, and Oregon area, Texas, and then those Southwest states. That's it. That's an update of where Vesta Equity is. From a technology perspective, we have completed full-scale front end, sort of the mechanics of the platform. We're just finishing off working with Algorand, some of the back-end tokenization, as well as the smart contract implements and integration with some other key partners from an API perspective. Any questions?
Well, very nice. I'm just a little bit bummed out that, because I wanted to tokenize my house, but I'm in Chicago. So
oh, we won't be turning anyone down from any other states. So if someone, let's face it, it's a digital marketplace and we'll be getting inbound inquiries. We won't turn anyone down from any other markets. those are just the markets we're going to be progressively approaching. We've already had quite a significant inbound, even though we're pre-launch, inbound inquiries from a variety of states across the U.S. People said they want to put their homes on the marketplace and are waiting to do that. So we won't be saying no to anyone, with the exception of maybe Alaska. And I won't get into it, but Alaska's got some pretty fucking weird laws. Pardon the French. So Alaska may be a state that we don't jump into right away simply for that reason. So,
or maybe Louisiana with the Napoleon
Louisiana could be a
code.
problem. There's a few little outliers there. So from that perspective, yes.
There we go. Awesome. And I was just prompting our audience. Looks like we got some questions coming through here, which is great. So guys, it is time for Q&A with Michael, not our Michael.
Yeah,
Michael
I was just going to
Vesta.
say, you might want to define that it's the guest Michael.
Michael C.
Michael C.
Which actually, we got to let everyone know this is kind of funny. And actually, Michael Carpentier.
No, I don't want anybody to know my middle name. So
okay, well, their middle initial is both J, and I know you have J out there publicly, Michael. So Michael Flight. Anyway, so they have the same middle name and first name. It's pretty funny.
And Michael Carpentier gets confused with Michael Jordan a lot when he signs with MJ.
Yeah, definitely. My mom would be confused.
So here we go. Question coming in from Aaron. Aaron Stuber, it looks like. Sorry, Aaron, if I can't, I've got my screen kind of getting small here. But the question is, I'm sure this has already been answered, but if an owner wants to sell the property, does the investor have any say on that timeline?
Oh, so that would be typically what we refer to as an off-chain sale. And we have mechanisms built into the platform to ensure that the homeowner doesn't sell below the appraised value. And if they sell below the appraised value, they have to make up the difference to investors. So if an investor buys into the home, holds on to it for 3 years, the homeowners decided they want to do an off-chain sale, they have to sell at the appraised value. So the investor is guaranteed that if the market has gone up, they get the appraised value. So they won't be penalized for, and it removes any, smart Alex who think, oh, I'll tokenize 90 or 80% of my home and I'll sell it for below appraised value and screw everyone. So we have the mechanisms built in to ensure that. It's an excellent question. It's a question that's come up before. And we've got the right processes in place to make sure no one can do that. So the homeowner realizes that when they buy in, it's part of terms and conditions, part of the smart contract elements that they're signing into, they know that they're going to have to make up the appraised value. So it removes any monkey business that can potentially go on.
And how do you stop them from adding more debt onto the property?
They can't. There's a deed of trust set up, and we will be the only deed of trust on the property.
Okay.
So if there's past debt, we have a system down the road for eradicating past debt. It's complicated. I won't get into it now. But they can't get any debt. It also protects the investors from an insurance perspective and property tax perspective, that those things are being kept up and maintained as well.
All right. And two, I guess, kind of quick questions here. One, are you guys hiring? And two, is Vesta Equity on Algorand?
It's Vesta, we're using Algorand. That's the backend platform that we are using. There are partners, so we're using their tokenization, smart contract elements. We're not using algos. We're using algo wallets, but we're not using algos because we've decided to use a stablecoin, and the stablecoin we're using is USDC by Circle, and that's to facilitate transactions off-chain and allow people to access the cash and deposit in their bank accounts. We did not want to use any other type of coin because we didn't want to add in volatility into the marketplace. It had to be about the appreciated value in the home, not the fluctuations in a cryptocurrency.
And we addressed that last week because we had a guest on that was one of the first attorneys that facilitated Bitcoin purchases.
Yeah.
And it's like, so how do you do it? Do you just hit a strike price and hopefully it comes in at that, when you close?
As long as Elon doesn't tweet something, you're fine.
And USDC also runs on Algorand too, correct?
Yeah. We picked them because they are a Algorand partner as well. Yeah.
Very cool. All right. Love it. More questions coming in. Thank you guys. Again, don't be shy. We got Michael here with us for about, let's say, another 10 minutes. So let's make the most of it. Great presentation.
Thanks.
Will you eventually be operating abroad or only in the US? And I know with your Canadian roots, Michael, I think I know the answer to this one, but let's hear it.
Yeah, the plans are to go global with the business. One of the things that's nice about this business is we essentially foresee the day where someone in Australia could be buying property in Africa or property in Asia or property in the United States, vice versa. Someone in the United States could be buying property in Africa, in Asia, Australia, or Europe. So yes, it's going to be a global business. That's what we want to do. Eradicate all the banks around the world and just have our solution for home equity financing.
Just don't say that you're trying to get rid of banks, because you really want to work with banks right now.
Well, they have our checking account, so I guess I got to be careful what I say.
You might have to get them operating in Lieberland, Michael.
Yeah, exactly.
So another question coming in from our guy, Sharav Mohammadul, wants to know, will selling some of my home, so he's referring to his home, will selling some of my home's equity through Vesta Equity affect the sale of someone's entire home? And what is the maximum amount of equity someone can sell?
They can sell up to 80%. I'm not sure what he means by the value of someone else's home. He may have to elaborate on that.
Right. Could you clarify on that, Sharav? I think I know the direction you're going though, so let's keep it rolling. What's the timeline look like for the rest of the US? This is just for me to you, Michael. I know you guys are you're making the movement with the weather.
Yeah, we'd like to be across the entire US in 18 months.
Wow.
Yeah.
All right.
With the exception of a few states, as I mentioned. As I mentioned,
what state? Go ahead.
We're not really going to limit inbound inquiries. So if someone inbound comes in Florida, even though we're not aggressively marketing in Florida, we're not going to say no to it. We're simply targeting specific areas at first because they pose the greatest opportunity as also the greatest likelihood for success early on. And there's also a great match of investors to property types in those specific markets. My partner Imran has done a significant amount of research into those specific markets. So there's a solid rationale why we're picking them. They also tend to access their home equity more often. So there's a lot of dynamics in there as well.
And he's worried about getting into New York and the price is depreciating.
When
everybody leaves.
Yeah, depreciation is an issue, but it's also an opportunity. Depends how you look at it. A lot of people would say Detroit sucks, but Detroit's actually being gentrified very slowly by new tech companies coming in, new electric car companies coming in. Young people are moving there because it's inexpensive. They're fixing neighborhoods up. A lot of cool things happening there. So it could be an opportunity to actually invest in that market when it's at its lower level and ride it up. People are going to invest in home equity for a variety of reasons. They're going to want to find the hyper growth markets. I don't know if you guys heard what's been going on in Toronto, but the market in Toronto is on absolute blazing fire with gasoline poured on it, where people are literally getting 15 offers for one home. And if they're told if you don't go over asking, don't bother submitting. So that's a hyper growth market, right? And then there's going to be markets where people are investing because they want to be in it for the long term. They want that addition to their portfolio where they're investing in a solid city, solid growth, solid economics. They're not going to have to worry that this is going to plummet in value. It's going to add growth to their portfolio. So it really depends what you are doing as an investor. And we are going to have people who play more of a speculative game, and that's up to them. All right.
Yeah, I just realized.
Our partner lives in Austin, Texas, and he had put an offer on a home, and there was 8 other offers. You had to do it above offer, but the person that actually won, quote unquote, won the house, no contingencies, 20-day closing, all cash.
Which means they don't get to inspect the home.
There was absolutely no contingencies. It's
Yeah, that sounds like Texas.
Yeah.
Yeah.
Wild West. I just realized there was a clarification. Sharab Mohammed did put it in there and I missed it. So what he was trying to ask is, will the selling of his home's equity through Vesta Equity affect the sale of his entire home?
No, he can exit the platform at any time he wants. It wouldn't be too dissimilar to ending a mortgage. The mechanisms are fundamentally the same. So they could sell off-chain with a broker if they want to, or if they want to sell it themselves. And all the mechanisms are built in to pay back the investors. The investors cash out if they want to. They pay whatever capital gains they have on it. And if there's capital gains for the homeowner, like it would be under a normal home condition, they pay their capital gains. So no, it wouldn't affect it at all.
All right, we'll take 3 more questions here. We had one coming through, and if JW, if you could clarify a little bit of what you mean there, because you're talking about tap pay, unless I'm missing something. Is there any, guys, let me know if there's any significance of tap pay in Vesta Equity. And then Joe would like to know, what is the minimum value of property, I'm guessing, in working with Vesta Equity?
We haven't set a minimum, but the likelihood on a lower value property, and again, it depends on the market dynamics. The minimum might be in a market that's going to explode, right? So we haven't set a minimum. There will be appraisals of the home as part of the process, and if the home is a dump, and I hate using that term, but if it's a dumpy home in a poor market that has no chance of success, there's a likelihood we won't approve them getting onto the platform. That's just a reality of it. But we haven't set a minimum. I mean, there's a lot of low value homes in the Detroit area that have got huge potential. And we're not gonna, we're not gonna say no to those homes. Part of the things we're trying to do is we're trying to give people the opportunity to have access to their wealth. And to someone who has a low value home, that wealth is their equity, and they need to access it. So we're not really gonna put a minimum on it. There's gonna be some criteria the home has to meet. And as we all know, some homes can be disasters in hyper growth markets. They're just teardowns, and the home has that value, and it could be a teardown and rebuild situation where it's going to have that value down the road. So the condition of the home may not be as important.
Thank you. And Daniela would like to know, I guess this is to all of us, but quite frankly, I don't know. I'm sure Michael, you guys have a better answer. Is Algorand the chain that has the most solid real estate projects right now?
Well, they've got some good ones. I can't say that they got necessarily the most solid. I prefer to let them answer that question, or maybe a third party outside who's examining this at a closer level. They've been very specific about which partners they partner with. It was not an easy process to get invested in by them. They invested in us as well, and their foundation also gave us grant money. It took a long time because they were very picky about who they work with and what you're doing. They don't want a sort of standard approach to finance just slapping on blockchain. They want you to really use their technology the way it's meant to be used and create opportunities. And they have a pretty rigorous vetting process. Now, having said that, if someone really wants to use Algorand, they can use it, but they're not necessarily going to develop the same integrated partnership and relationship that we have with Algorand, which was really important to us. It's like not having good tech partners. They're going to be short-lived if they don't have good tech partners.
Right.
So.
And we did a study on 12 different chains, and there are other chains out there with right now more real estate projects. Yeah. And there's other chains out there that might be introducing more real estate projects. We just happened to, for all the parameters that we had, which were about, 20 different metrics, they hit the most boxes. So, and honestly, as Michael was just talking about, there's somebody that you can talk to there. And some of the other chains, it's you might get a hold of a foundation, you might get a hold of like some nebulous marketing team. But my concern, especially with issuing a financial asset, and I'm sure Michael has this thing, is like, if something goes wrong, who do you call?
Yep.
And with Algorand, it's not only distributed, it's not only secure, it's not only, everything that you're looking for on a blockchain, but there's also somebody there to talk to, as Michael's talking about from a technical side.
No, that's very true. I mean, the difference between a lot of the other chains out there and Algorand is the other chains sort of evolved. Algorand was purpose built, right? Sylvan McCallie had a vision for this, and it was purpose built to that vision and use cases. And that is the difference between Algorand and those other chains. So a lot of the other chains are phenomenal technology and very smart applications, but it was purpose built. And it's one of the things that really attracted us to the solution as well. Our CTO, Talon, also has a strong history with Algorand. So there's that comfort level as well. And that was also something that was very important for us, because down the road, we're going to be pushing the boundaries in terms of use case. And we want to be able to have that confidence that we can pick up the phone and talk to people when we need to. And that's to your point that you just mentioned.
Love it. Love it. Thank you both for going into detail there. I think that helps clarify a lot of questions I even had. So here we go. Time to wind it down. Michael, what is the best way for our viewers to follow up and get in touch with you? Actually, Michael Flight, I know the best way, so I don't need to ask you, but Michael.
Why don't we, this is Michael, he's the guest, he's presenting, so let's let Michael.
I had your emails next to each other on my sheet, and I just kept going.
So let's let him, because we really want people, if they're interested in investing, if they're interested in putting their house up for tokenization, or if they're interested in, some sort of partnership, we want them to contact Michael and Vesta Equity.
Well, the best way to contact us, just go to vestaequity.net and hit the Let's Connect button. And if you fill out the form, we'll be in contact with you in no time at all. If you want to reach me and you want to invest in the business, because we're still looking for a few final slots for our current round, the best place to reach me is through email, which is mcarpentier@vestaequity.net. And my phone number is 647-895-5008. If anyone wants to reach me that way.
There we go. And we're just getting it here in the chat real quick. Vestaequity.net. There you guys go. Go ahead and follow up with Michael. And good catch there, Michael Flight. I had you guys' emails, as I mentioned, right next to each other, so I just kept going. But Michael Carpentier, thank you so much for hanging out with us here today and sharing so much valuable information. I know this one's going to get a lot of traffic, a lot of traction, and I think it's something that a lot more people need to learn about. So it's really cool to know that we're in here at the beginning with you. So any final words or closing remarks for our audience today?
I mean, from my perspective, keep an open mind about the technology. I've heard, so many negative connotations with regard to blockchain. It's the use case of blockchain that people got to think about. It is a groundbreaking technology that is going to change the financial industry significantly. Essentially, you're going to end up with the power of a bank in the palm of your hand. So what digital technologies have done to other industries is going to do to financing. And that is a powerful thing. To have the power of a whole bank in your phone is significant. And that's what this technology is going to enable. So it's not some flimsy trend. It is here to stay, and it's going to radically change the face of the industry over the next 10 years.
And I just want to follow up on that, because exactly what he said, and I, talked to a number of people over the past 2 years, and it's kind of like, the wheels are turning on some of them, and some of them just don't understand it. But I'm like, you're going to be in the middle of Africa, and you're going to be able to, put $50 into an office building in London. You're going to be plowing, a field in the middle of Iowa. And you're going to be able to, put $50 into, if you want to take a, flyer on it, house in Detroit. You're going to be in, Argentina, and, maybe you're looking for something stable. So you're going to put your money into, more of a stable fund, and something that's going to pay you passive income. And if you want to walk out of the country or go someplace else, all that, passive income and all those coins and all that value follows you and goes with you. Yeah,
that is a very good point. It's not geography bound. It's yours. Wherever you are, wherever you go, you've got it on you at all times. Very, very true.
So cool. Well, thank you again. And thank you to our audience, all who joined us today live at the Chicago Blockchain Real Estate Collective. We want to thank you for investing your most valuable resource with us, your time. And so our next meetup is going to be on July 8th. Our guest will be, Michael, you can add a little color here, but I believe Oasis Pro Markets. Is there anything that we should be anticipating from Oasis?
Well, this is going to be kind of a follow-on to what Michael, our guest today, is. So once the stuff starts trading, especially the securities, Oasis Pro Markets runs an ATS, and they're doing trading and liquidity. So what we're trying to do, as we talked about before, stable tradable real estate. Oasis Pro Markets and their ATS are going to be able to provide that kind of liquidity so that I could decide to sell some of my fund to Michael, or Michael, might even want to trade some of his equity in a house, and those guys are figuring that out. So we're very excited about that, because that's the next thing that a lot of people don't see coming, but I know is coming, is that real estate is going to be much more accessible, and it's going to be tradable. And you're not going to be locked into a partnership or some sort of LP position for 5, 10, or as I like to tell this story, my mom just got out of a deal that she couldn't get out of for 40 years. So.
Wow. Yeah, that won't happen anymore.
Yeah.
Good riddance to those days.
Yes. Yes.
Yeah.
All right. And so Michael, Flight, one more time for just quick for Liberty Fund. Fund is currently open. People can go where to invest with Liberty Fund?
Well, what we like to do is provide a lot of education on the website. So you go to libertyfund.io, and there's not only education for blockchain real estate, but there's also education for the net lease property, market. A lot of people might invest in multifamily, might invest in self-storage, but one of the highest performing assets right now and over the past 2 years has been net lease properties, and they're also the most stable. So go to libertyfund.io. Got a lot of education there. If they'd like to arrange a call with myself, Jason, or any of the other people here, we'll even throw Adam in the deal if you need to talk to him.
Throw me in there.
Go to hello@libertyfund.io. That's hello@libertyfund.io. We've also got all over the place on LinkedIn, Instagram, Facebook, and Twitter. We've got a lot of educational content out there. And if you just even want to talk about net lease properties, I'd love to do that too.
Awesome. Thank you. And Daniela, I believe that question is answered in the webinar, probably the Q and the FAQ that we have for Liberty Fund out there as well, Michael. So is that the
best?
Yes,
but Liberty Fund is available to accredited investors. So it is what you would call retail investors, but they have to be accredited. So unfortunately, we have to follow, as we were talking about with Michael, SEC regulations, and we want to do it exactly the way they tell us to. So as of right now, but a really cool thing about security tokens is after a 1-year lockup period, the tokens can be traded to any investor, whether it's accredited or not accredited. Which is also unusual from like a regular syndication standpoint. So I apologize for interrupting you. I'll stop.
You're fine.
I get excited about talking about this stuff.
Yeah, every reason to. So no, that's it. Again, ladies and gentlemen, thank you.
Thank you for listening to the Blockchain Real Estate Podcast, hosted by the Blockchain Real Estate Summit. Don't forget to sign up for the Blockchain Real Estate Summit 2024, happening this September 24th through 26th, online for our worldwide audience. Get your tickets at blockchainrealestatesummit.com/registration. If you enjoyed today's episode, please make sure to follow the Blockchain Real Estate Podcast on your favorite platform and leave us a review. Your feedback really helps increase the visibility of our show, allowing us to reach more listeners like you. If you have someone in mind you would like us to interview, you can go to blockchainrealestatesummit.com and leave a comment.
Hi, this is Adam Carswell, the voice of Liberty. This podcast is solely intended for informational and entertainment purposes only and is not intended to provide tax, legal, investment, or accounting advice. You should consult your own tax, legal, accounting, or investment advisors before engaging in any transaction or undertaking. Thank you for listening to the Blockchain Real Estate Podcast, which is a part of the Blockchain Real Estate Summit Network. Go to blockchainrealestatesummit.com for more information, free reports, and giveaways with free stuff. Thank you.